Welcome back, ladies and gentlemen, for another YouTube video. Allincrypto here, and today we have an exciting video lined up for you. We are going to be looking at a clip from the recent Bank of International Settlements conference meeting, if you will, where they talk about the implementation of global regulations when it comes to cryptocurrency assets, is what they're calling it. Similarly to what the SEC is calling it, and stable coins. This is very interesting because I think there's always a lot of pessimism that often comes from the frustration in regards to where the market currently is. And I don't think it's warranted given the fact that the cryptocurrency space is on the cusp of changing and being implemented in pretty much everything and changing the entire world. This is a technological advancement, no different to its predecessors, i.e. the railways or the motoring industry. You know, we all drive cars, we all are communicating over the internet, we all have mobile phones in our pockets, we all live and use technologies that came before us that had teething problems to get to the point where they are today. Blockchain, crypto is no different. It is the future, guys, and you get the opportunity to be early investors. So we'll play that clip towards the end of the video. I want to go over a little bit of price action first. I want to look at the Bitcoin chart. I want to really tell you guys exactly what's going on. Yesterday, we did speak about being in a bit of a danger zone for Bitcoin. You know, ultimately, we have two scenarios at play on the short term, and it could go either way, in my opinion. So either we take the path where we just drop from the range that we were in, which we now haven't done because we saw that bounce on the grayscale news, but we're still in the danger zone there of potentially setting up a right shoulder that could see Bitcoin, if it breaks the neckline and it is confirmed as a right shoulder, could see Bitcoin come down to around about the 20K range. Or there are levels where we get out of the danger zone and you can start to sort of look for short-term upside. We are still in the danger zone. I think there was a lot of frustration. Certainly yesterday, we went from euphoria with the grayscale news all the way to a dark, deep depression. Certainly for altcoins. Altcoins are basically back where they were on the breakout of grayscale. So they retraced a lot, and Bitcoin is a little bit more elevated. But what you had happen yesterday, which I think is very interesting, is a load of premature longs opening up on the news. Retail is the lamb to the slaughter. They are the meat to the meat grinder, unfortunately, guys. And just like we were telling people not to short support, we weren't telling people, we were saying, look, you don't short support for this exact reason. We had a lot of shorts get wrecked in that squeeze, and then we had a long squeeze as people got overzealous and wanted to get in late to the move. You position before or after, not when it's happening. If you are one of these people who news trade, I wouldn't say momentum trade because there is a whole sort of trading school out there or thesis out there in regards to momentum trading and how to get on the right side of it. But if you're somebody that reacts to the news and opens up positions as a result of it, I guarantee you will not. Your P&L will not look particularly healthy. So I think largely what you had here, sort of recapping and talking about everything. Then we'll talk about the dollar because it's the main story. We had ADPs yesterday, which came out quite negative, saw the dollar go down, but also saw Bitcoin go up. You know, the dollar is the story, I'm afraid, guys, whether we like it or not, and we'll really show you that in this video. This has been the sort of tide that we've been talking about, Bitcoin being the swimmer that Bitcoin's had to swim against. It's no coincidence that the dollar rolled and Bitcoin got a little rally here, irrespective of the grayscale news. But let's talk about it. So we have been ranging, and this is something that we reviewed, and we said, okay, lots of things going on. There's potentially Elliott wave theory structure. There's all sorts of things going on. I'm not an Elliottician, but it's very apparent. You know, the law of threes does play at marks all the time. We're essentially in this range, and we said, look, probably not the great place to short. Yes, it could roll over, and you could just go straight down, but it's likely you're going to get a short squeeze. This was that short squeeze. There was news that was attached to it, but we were already looking at potentially this being the case. You then came up. You would have had a lot of overzealous longs that got liquidated, causing that down pressure at a time when the market is very, very low in terms of volume, and then you've had a drift off. For altcoins, we'll use Solana as an example. You know, you're essentially just back in that range, slightly elevated from it, but you've just essentially come back. Is this now a support and resistance slip? We'll see, or are you just back in the range? Ultimately, Bitcoin's got to continue to show strength here, or, and it's not a beautiful right shoulder by any stretch of the imagination, you end up in this kind of danger zone. And we were saying the danger zone for us really is until you get above these kind of levels here. So you break these levels, you're looking for that downside. You break these levels, you're looking for the upside short term. You're in no man's land here. You know, I can't really give a short-term prediction. Mid to long term, we think everything is hunky-dory. We really do. You know, we assess that the crypto revival is here. The entire world is moving towards crypto. Very interesting. We've been teaching a lot of stage analysis, which is why we've got 30 moving average here. Very interesting that this is just a retest until proven otherwise. So don't be particularly bearish until there's reason to do so. You know, people got bearish at this point, and then they got bullish at this point. You are the meat, unfortunately, to the grinder. And this is how the entire trading finance industry is set up. They want you guys running in there, over leveraging, so that they can take your money from you. And this is how markets work. You know, it takes money from one and gives to another. So this is still a retest until proven otherwise. We kind of knew a bounce was coming here because we looked at, and we were one of the only channels to do it, the likes of miners, which were in a similar place. Also, Coinbase was in a similar place. We're expecting a bounce for that. And I am currently talking with my patrons about some real opportunities in regards to this sector and actually some outperforming Bitcoin opportunities. So you essentially, and remember, Microsoft was one of our kind of great calls this year. Break, retest. Crypto, I think, is still on that path until proven otherwise. Okay, so this can still fix itself and go higher. The problem for me is it's all centered around the dollar, and the dollar is that thorn in your side. It's the thorn in my side, that's for sure. Let's put the dollar in a nice green color. Don't like how it's a kind of arbitrary Bitcoin orange. So this is the dollar, right? Now, we didn't appreciate, so dollar up, Bitcoin down. You know, there's macro reasons behind this, there's fundamental reasons behind this, blah, 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 blah. We should have been rallying from October, November. And thank goodness for me that we weren't, because we didn't get in till down here. We stayed out of this. 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 We only got back in here. And actually, if it wasn't for FTX, there's quite a high likelihood that crypto would have gone with the stock market. So the stock market is a great barometer for the dollar. Dollar up, stocks down. And then dollar down, stocks up perfectly. Okay, and then you can see we've had this downtrend. Where has stock started to sort of see that pullback? Well, it's with the dollar. Not only were there technical levels for this, you also have the picture becomes painted, right? And on top of that, if you look at crypto, it kind of went with the direction of the stock market, which of course is driven by the dollar. So this is all about the dollar. Where did you have your spike for the stocks? Where did you have your spikes for crypto? On a little bit of dollar weakness that was likely caused by ADPs, which is an employment stat that took place yesterday, right? So you now have non-farm payroll. The real question is, what does the dollar do? The dollar's going to match up with Bitcoin. So is this your right shoulder? Then you look for your downside. We have looked at the fact that you've got a three-wave impulse here, which is very likely an Elliott wave theory. And the real question is, after that five-wave, you usually get an ABC correction. Is this the A, B, and C? Or is this the A? You're now getting the B into the C, which would tie it with his head and shoulders. You guys know what to watch. Ultimately, yes, we are bullish from a spot long point of view over the mid to the longer term. We don't assess that this demand destroying 2008 event that everyone's been talking about for forever now is coming until later on down the line. And we've looked at rates and we've done studies on that to support our claims. So it's all about the dollar. There's an element of inflation, of course, in this. Inflation seems to be a little bit sticky. We've been looking at things like true inflation, which has got inflation sort of ticking a little bit back up. If you look at your commodities, they could be, and remember we told people not to long commodities at this sort of resistance level, but they're now having another stab at it. You know, you keep knocking on that door, eventually you'll go through it. You got to watch commodities. It's all going to drive the dollar. It's going to drive rates. We've got non-farm tomorrow. We'll see what that comes out at. The dollar's plan, which has been, annoys me, but that's because obviously, we want the dollar weakness to support our claims. It's how it goes in markets. Unfortunately, everything doesn't always go to plan. But if you take this level out here, this is going to be Bitcoin. And this is going to be the dollar. And then you're looking at potentially a stage 2 breakout for the dollar. This is the things to watch. It's largely going to have an element of macro, but the technicals are already sort of pointing to that way. Dollar being very strong, you can look at USDT dominance. That is technically the plan, guys. Okay, and we've laid it all out. We've shown you what's affecting what and where we are right now. Until crypto gets that wind underneath its sails that's going to move it solely, you're just going to get blown around by the macro. And the macro right now is the dollar, and we've just shown you that. The next thing I want to go on to, guys, is now a clip of a recent meeting from the Bank of International Settlements talking about crypto, talking about regulations, global regulations, which are coming. They are going to implement it. And they're never going to allow this technology to, and there will be elements of it that do and outside of its reach, but they're never going to allow, certainly in somewhere like the United States, and we're seeing that right now, this technology to survive and thrive on its own without a overthrowing of those governments and those powers that be. So let's go ahead, guys, and get into this clip. It's rather a long one, but it's well worth a watch. I fished it out, not seen anybody else play this. But for you guys, we're going to do exactly that. So let's get into it, guys, and then we'll wrap the video up.
Our work, crypto assets, like Martin said, has been taking up a lot of time and mental energy in terms of thinking about what the next step should be. If I can just start with a big picture sort of framework, which I think you're hearing from each of us, I just want to sort of maybe put it into my own words, which is I think there's three things that we probably are all trying to do. You've heard a lot about us trying to agree on minimum standards that can be applied globally, and that's a lot of what you've heard is us working on that. And Martin was just alluding to the second one, which is once we have those in place, we have to work to ensure that those are implemented consistently around the world. You can't have pockets where it's not implemented. It just doesn't work at that point. And then the third piece is, I think you heard it a few times already, is this is an area that's just changing rapidly. Martin referred to 3 different phases. Neil referred to some changes and how hard it is to categorize things. We have to have a framework in place that ensures that we're going to cooperate, coordinate, and share information, because once we put these standards in place, we can't just sit back and go, it's done. We have to be talking to each other all the time. So that's the sort of big picture of what we've been working on. In focusing on that first part and agreeing on those standards, what has the FSB done? In 2020, we released our first set of recommendations, high-level recommendations, and they were focused on global stablecoin arrangements. In 2022, October of last year, we released a set of recommendations on crypto assets, activities, and markets, a broader set of crypto assets, I guess that's the way I would describe it. Again, a high-level set of recommendations. If you look at them, and I'm not going to, please don't ask me to quote all the recommendations. I could try, but I won't get the words right. So, and I'm not going to recite them to you now. But 3 principles that underlie those, and I think you've probably gotten a sense of this from others as well here. If it's the same activity and the same risk that's involved, the same regulation should be involved. You can't say, well, we're different. If the same risk is there, it's got to be the same regulation. The technology, we've taken a neutral approach. So what is the underlying technology? Again, it goes back to that first principle. If it winds up with the same risk, I don't care what the technology is underneath. So we have been technology neutral in the recommendations that we put out. And then the FSB, because we're trying to sort of provide this coordinating envelope, our recommendations are high level. They're not going to give you specific nitty-gritty standards and guidance. That's what my colleagues here are working on. So they're high level and they're designed to be flexible. Different jurisdictions are going to have different situations and circumstances into which they want to apply those recommendations. So hopefully we've met those. So where are we? In October 2022, we sent these 2 sets of recommendations, which are supposed to be a comprehensive set of recommendations for the supervision and regulation of crypto assets. We sent them to the G20 as our draft set of recommendations, and we also released them for public consultation. So they were out for several months on that. The consultation was largely supportive, and we're about to release the revised final recommendations. They'll go to the G20, which is meeting in about 2.5 weeks. The revisions, I think you'll see that most of the revisions reflect events that have taken place in crypto asset markets over the past 6 to 9 months, things like FTX, for example. So you'll see some recommendations where you can very much see the link to what has happened there. So are we done? No, of course not. We're looking now to go deeper into some areas. For example, we now know that these large crypto conglomerates that perform multiple functions have some risks that we weren't aware of. So we're doing some deep analytical dives to sort of assess the financial stability vulnerabilities. not making policy there yet, not making recommendations there yet, but trying to understand them better. And we're starting the discussions on, okay, we've put out our recommendations, at least in a couple weeks. So next week, we're going to have a discussion of how are we going to ensure that these get implemented consistently. The FSB has some reach. You know, Martin has a different membership, Neil has a different membership, we all have different membership. How are we going to work towards that? Because if there are pockets that don't implement it consistently, that's where the firms are going to go. And we've seen with events already that that's just not a good outcome. And then we have committed to assessing the implementation by the end of 2025, the assessment of the implementation of our recommendations by the end of 2025. So we're going to let people put things in place, and then we're going to take some action. And I'll stop there.
Very interesting. The end of 2025, they're going to have things actually implemented. Okay, so that means there's going to be a lot of running up to it. A longer clip, but an interesting one, and I thought it was worth sharing. The entire world is getting cryptofied. It's getting blockchainerized. It's getting DAG-ified, whatever. Guys, I don't think people, and I understand the frustration. We spoke about yesterday how frustration in this market turns into pessimism. Okay, we'll get out when we think there's time to get out, but we assess that the revival of crypto is already here, and that, you know, it's an exceptionally bright future you guys have ahead of you as crypto investors. You are still exceptionally early. This technology is not being used. It hasn't got billions of users yet. That is all still to come, and the entire world is going to get tokenized or tokenized. That is a future that's absolutely being steamrolled. And ultimately, these guys are talking about 2025. It's near the end of 2023. You've got a year or so left. It's all going to probably tie in quite nicely. On that note, I'm going to love and leave you. If you enjoyed the content, like, appreciate it, a comment, and I'll catch you in the next one. Thanks for watching. See you in the next.